there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Friday. In fact, very happy NFP day. In today's program, I want to do a brief preview of the all-important NFP indicator or NFP announcement coming later today, and have a little chat about, why the market is really focusing on this data at the moment. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So like I said, happy NFP day, everybody. Non-farm payroll day. Now, I remember back in the day, this used to be such a huge event for the currency market. I remember back in the day when I was on the floor, we were so excited about this event, and it really was all hands to the pump, so to speak, when this announcement happened, because it could really move the market. Over the last couple of years, though, like I've said on previous videos, it has lost a little bit of the impact it used to have on the market. However, I do think today, and it has started to be a little bit that way, it takes a key stage, and again, it's something of quite importance. And the reason why I say that is because we have this ongoing recession debate happening at the moment in the US, whether or not the US are in recession or not. Obviously, last week we had the GDP for the US, which came in negative 0.9%. And that was 2 quarters of decline. So that technically is a technical recession. However, there are those in the US who are also saying at the same time, it's not a recession because we have a really strong labor market, which they do have a point about. However, the reason why I think this is beginning to get should start getting a key attention is because if we start seeing a slowdown in the labor market, then they really can't argue anymore that we haven't, we're not in a recession. Now, expectation today is for 250,000 new jobs created, and that's down quite considerably from the previous figure of 372 last month. Now, if it does come in at 250 on the plus side, that is the 19th straight month of payroll expansion. So again, that's quite positive. But here's the thing. If we do see a slowdown in the number, this could lead the market to believe the Fed is going to be less aggressive with interest rates. And if we just have a quick look at the figures since January, since January. In January, the number was 504,000. In February, it was 714,000 new jobs created. In March, it's 398,000 new jobs. April, 368,000. May, 384,000. And June was 372,000. So if we see 250, I don't know about you, but I've been reading those numbers out. Can you see that slowly but surely, over the last couple of months, it is beginning to slow down? Now, the market, like I say, if we get a 250 or something even lower than that, the market generally is going to think that the Fed won't be aggressive with interest rates, and we could see a weak dollar. So anyway, so like I say, even so, there's something else. This is something else which is worth to know. If it does come in at 250 or lower than that, that would be the lowest number, NFP number, since April 2021. So it's going to be fascinating to watch. It really is going to be fascinating to watch. It's not just the NFP, of course, which comes out at that time. We have US unemployment, 3.6 is the expectation. Average earnings month on month is expected to stay the same at 0.3% as well. So anyway, this is going to be quite a big event in my opinion today. Like I say, hopefully we'll get to the day where it's back to where it used to be many years ago, when it used to be a key market mover. But anyway, because of this, because I'm taking a great interest in the labor market, purely because of the recession debate, I will be doing a watch along with it. Tixee Live watch along of the NFP and the US unemployment announcement. It's not tomorrow, it's today. I forgot to change the words. Today, it's not tomorrow, it's today. Today at 12:20 p.m. So please come and feel free to come and join me. It should be a key event. I'm pretty excited about it. And like I say, I think if we get a strong number, then that's going to be a green light to the Fed to be aggressive with interest rates. A weaker number, then it's going to be an amber to the Fed to slow down on the aggressive rate hikes. So yeah, it's going to be interesting. So please come and join me. 12:20 p.m. UTC today. NFP and US unemployment, and of course average earnings. I will go into a lot more detail, obviously, and we'll go over some proper scenarios as well during the watch along. That's why I go on 10 minutes before the announcement. So do bear that in mind. Okay, so we're gonna let's have a quick look at the market, how it stands at the moment. At the moment, like it usually would happen pre-NFP, the market is pre-sideways. Because I say the market sort of holds its breath and it waits in anticipation for it. The euro is slightly lower at the moment. Well, it's actually more range bound than anything else. It's currently trading 1.02262, way under that key level, which we put in quite a while back now, 1.02684. It's still above the 100-day and the 200-day moving average. This is on a 30-minute. But like I say, it's going to be sideways for most of the day until we get the NFP announcement. The sterling had a bad day yesterday. Those of you who were kind enough to join me for the Bank of England interest rate announcement all see, and the press conference, what happened afterwards, them being brutally honest to us about the conditions of the market and scaring us with the 13% inflation by October and recession by Q4. Anyway, it's managed to recover slightly. These were the lows yesterday after that press conference and the monetary statement, which really spooked the market. Since recovered from there, but still fairly range bound. Currently trade at 1.21469, again under that key level of 1.21976. The dollar yen again is sideways, currently trading around this area of interest, 133.36, seems to be holding there for now. Again, it's going to be range bound for the majority of the session. Gold, of course, it's always gold. James, you love gold. I do love gold. It's very shiny. No, I was just joking. It's the first thing I ever traded, so I do have a bit of a love affair for it. Right, it managed to slightly try and break that key level of 1,791. It couldn't break it, but at the moment it's hovering around that key level, 1,791. This potentially could be one of the big movers as well on the NFP, and I will be watching this quite closely when the NFP is announced. Okay, what else is happening? All right, what else is happening? I tell you what else is having a bad time at the moment, and it's not just the sterling. It's not just the sterling having a bad time. Oil is having a pretty bad time at the moment. Demand concerns, and obviously that incredibly scary warning done by the Bank of England yesterday has really put pressure on oil. Now, as you might have remembered, yesterday I discussed how the EIA reported that they had in the US a stockpile of 4.5 million barrels against the expectation of only having 600,000 barrels. They also reported they had 200,000 barrels in storage of gasoline against the expectation of it being a negative 1.4 million. So this is giving the market the impression that demand is waning because the US, who's the biggest consumer of oil, if they got such big stockpiles, that means the demand for oil is beginning to decline. So it's no longer a supply issue; it's now a demand issue for the black gold, as they used to call it. So yeah, and obviously we're in the height of the US summer driving season, which isn't happening because nobody's doing the driving season this year. So this is why oil is under pressure, and plus obviously the Bank of England is scared everybody in the market. In fact, it's so bad for oil at the moment that oil has actually given back all its gains it basically got from the Russian invasion of Ukraine. So this is how bad oil is having it at the moment. Let's have a quick look at it now. Let's have a look at it. Okay, let's have a look at it. We'll look at it. I mean, I'm currently trading, it's on a 30-minute, $88.26 a barrel, okay? But let's have a look on a daily and see what I mean, okay? There's a key area here that I've put in, $89.54. But look, when the invasion of Ukraine happened, okay, back in February, So here's around here. Oil was trading practically where it is now. And then obviously Russia's invasion happened and oil spiked to almost 100, well, touched $125 a barrel. And it carried on being fairly bullish. But now, because of the demand issue and the fears of recession, hello. Oh, thank you very much. Thank you. Nice to see you. I hope you're well. And I hope you're having a good day, my friend. Like I say, but since obviously the demand issue, oil is practically now gone straight back where it was before Russia invaded Ukraine. So like I say, it's currently trading at $88.26. So it is a big issue. The demand recession fears on the commodities in general is really weighing it down. If you look at Brent as well, let's have a look at Brent. Again, this is Brent was on a daily. Okay, not so dramatic, but still $94.34 an ounce on Brent. Okay, this is where it was again, nearly not bad as WTI, hasn't totally given back all its gains yet, but it's still pretty close. This is where it was before Russia's invasion of Ukraine started, and then obviously it spiked to $130 a barrel, but now it's under pressure again. It's now all about demand, no longer about supply. So yeah, oil's having a really bad time of it. But anyway, today's all about the NFP. And like I say, back in the day, this used to be such a major event. Honestly, it was so intense. We used to count down to the last 10 seconds before it was announced. Excuse me, sorry. Throat strikes the aircon. Oh, dear. And again, I do apologize. It used to be a major, such an exciting event, but in the years which have gone by, it's lost its impact so much. But today, I think with the recession debate, I think this could be key. So please come along and join me for my watch along. Again, it's at 12:20 p.m. UTC today. We'll watch it together. We'll go through some scenarios together and we'll watch how it unfolds. So please come and join me for that. As the market stands, okay, good question. That's a very good question. What would you be keeping an eye on during the NFP? Well, the assets in particular I'll be watching, and we can watch together, will be gold. Again, because I am a gold bug. But gold, it could be quite volatile on the back of it. Euro, dollar, cable, the sterling, dollar, yen. Obviously, I will have a quick look to see how the markets react. S&P 500, but really the main ones are going to be dollar, yen, euro, dollar, cable, and gold for me. Those are the ones I'm going to be watching in particular. But anyway, good question. Very good question. Market as it stands, the FTSE is currently trading at 0.02%. DAX currently trading at 0.08%. Euro Stoxx 50 currently trading at 0.27%. So like I say, it's going to be pretty range bound, pretty sideways for majority of the day, like it usually is on NFP day. But anyway, come and join me, 12:20 p.m. UTC, watch along, NFP. Let's see what happens. Is there any questions at all? Or does anybody like to say hello or, share their opinion, what they think about the NFP? What do you think the number's going to be? Do you think it's going to be as they anticipate? Or is it going to be better? Don't forget last month, again, they did predict a weaker number, but it came in a lot better. It came in at 372. There is whispers that we could get a good number because we've had a good US services PMI recently. So they think we could actually have a better than expected NFP. But what do you good people think? What's your opinion on the NFP? Or what would you be watching on the market when it happens? No? I mean, is there any questions anybody like to ask me about any of the other assets or anything like that at all? Or simply say hello if you like. No? Okay, not a problem. Not a problem. Remember, like I always say, if you think of a question later, put it in the comments below on either YouTube or Facebook. I will see them and I will reply to that question next time I'm live on air. So do bear in mind you have that option too. Anyway, like I always say, if you're watching me on Facebook and you've enjoyed this little episode, by all means, give us a follow if you like. If you're watching me on YouTube and you've liked this little episode, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and found it useful and basically put up with me, my over-the-top enthusiasm for the market, which I just can't help because I love the markets. I love the markets. Good man. Well, I hope to see you on the watch along, my friend. Come along. It'd be even more interesting. Hello, and thank you for saying hello, by the way. It's nice. Like I say, if you put up with me, my overtop enthusiasm for the markets, which I can't help because I love the markets, it's just the way I am. Give me one of those. It's nice to know that you like what I do. And I can see I've got a couple of likes already, which I really appreciate. Everything. Anyway, till next time, or till later this afternoon, 12:20 p.m. UTC. Till then, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.